Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market prep video for April 17th, 2024. Well, yesterday we didn't get the move that I think a lot of folks were hoping for, including me, thinking that we should see a little bit of a relief rally, but it just didn't develop yesterday as we still continue to see those bond yields being stubbornly high, and then comments from Jerome Powell suggesting that, well, we haven't had enough progress so far this year in our inflation fight. So that really kind of tamped down spirits here in the market. But let's take a look at what happened overnight. First off, we had Asian markets mostly lower, with Hong Kong and Shanghai just slightly higher. Asian markets struggled just a little bit because Singapore's exports really fell off the map, a pretty substantial decline in exports. But other than that, it was much better than what we have seen. As a matter of fact, the selling, except for the Nikkei, was relatively muted. If we take a look at Europe this morning, European markets are strong this morning, showing bullishness across the board. They are obviously monitoring the situation here in the United States on what Jerome Powell had to say, but the UK inflation eased up just a little bit to 3.2%. And then if we look across here in the United States, we have our futures are all up this morning. Now, we've seen that just about every day. In the last couple of weeks, we gap higher in the morning and then sell off. So right now, we're showing lots of bullishness, but maybe a little bit of hope that we can catch a relief rally here. So watch carefully here. And if we take a look at oil this morning, oil is just slightly lower. There is concern about our economy right now, that our economy is in a weakening cycle. And so oil is actually reacting to that this morning, saying that our economy is likely going to demand less energy because consumers are struggling. We'll see if that's the case, but right now we have oil down 74 cents a barrel at 84.62. Brent is down 78 cents at 89.24. Natural gas is down 5 cents this morning, so a little bit of weakness there. If we take a look at our gold and precious metals, gold is just slightly lower here this morning. It's down, gold futures are down $3.30 an ounce at the moment. Silver happens to be slightly up, copper slightly up, platinum and palladium lower. And then if we look at cryptos here this morning, we've got Bitcoin trying to improve here. They had a kind of a rough day yesterday, but trying to come up here this morning, about $174 a coin at the moment. And a mix in the crypto markets right now of up and down modestly. Let's take a look at our bonds this morning. Here's our problem. Bonds just not easing up much. The 2-year bond right at this moment is 4.95%. So it has come down a couple of ticks from the close of yesterday. The 10-year bond is at 4.64%. And the 30-year bond is at 4.75% this morning, continuing to move higher. So we still have this major inversion and this major pressure in our bonds. And of course, that is creating all kinds of worry and concern in the market. So we'll have to be keeping a pretty close eye on that. So what does all that mean for today? Well, how about we settle in? Let's buckle up. Let's get ready for the Wednesday edition of the Morning Market Prep video. Good morning once again, everyone, and thank you so much for being here. I do truly appreciate it. Let's take a look at our charts and see if we can figure out how we might want to approach the market for today. Remember, we want to shake off our bias and we want to look at those charts for what they are, not for what we want them to be. So first off, we had a really good hold here yesterday. yesterday on this price support area. Notice we went down here in the diamonds. We retested this low in the chart, and then we bounced up, creating a nice relief, I guess, or I should say a hold of support in the chart. And this morning we're showing a little bit of bullishness and that possibility that we could follow through to the upside. So with that in mind, our next resistance target is going to be right here in the chart for an upside move. So watch that carefully. If we can start pushing up through that level, that will be very, very important. And then if we can push through there, then I'm going to suggest we come up here and we start testing up around the top of that big ugly candle of Monday, and see if we can reach up into there and test this area in the chart. Now, as we push up, remember, we're going to be running into this downtrend as well. One thing about this downtrend, though, it is very steep, and it may have a better chance of breaking if we can get a good push to the upside. But once we pop through there, I want you to notice that this area up here is going to be a pretty significant resistance level in the chart. Right through there. That's going to be pretty significant. And as we push into that area, we'll also want to note that we'll be pushing into an area of a 50-day moving average here on the diamonds, starting to roll over to the downside. Notice that we've got our 8 exponential has moved down through, this 34 exponential has moved down through. So we're creating a bit of a zone of resistance right in this area that we'll want to be watching pretty closely. Now, if the bears were to find inspiration today, of course, we'd be looking for this area of price support to hold here in the chart. And if that doesn't hold, I would say the next level down is probably going to be the lower side of that consolidation in the chart. And beyond that, we'd be coming down in here. I do, however, think the odds of a relief rally have grown substantially here because we're oversold in the short term, and markets usually don't fall in a straight line unless we have something else in the market really kind of blow up, attacks in the Middle East, something along those lines that really bring in some additional pressure or concern. I think a little bit of relief rally is due here. Now, if we look at our our SPY, our SPY also held in here on support. Notice we did go down and we made a new low, just barely made a new low here in the SPY, taking out that support, and then we bounced back up at the end of the day, holding on to it. So if the bulls can continue that push to the upside and we can find that inspiration, I'm going to look at this area right here as a resistance in the chart that we'll have to be examining and watching pretty closely. But if we can push through there, then we're going to run into kind of this double whammy where we've got our downtrend here and a fairly substantial resistance zone here in the chart that we'll want to be watching for that potential of reversal. And that would be a common place to find that reversal if we're going to be watching or if we can push back up there. Now remember, I'm not trying to be bearish here. What I am trying to do is show you that there is risk here in this chart. And so far, if we get a pushback up, it's a relief rally and a relief rally only until we can really prove that we can push out of that downtrend. So you'll want to keep that in mind and be really careful not to just race in today thinking we're going to zoom back to the top, because so far we don't know that, and there is a lot of uncertainty here in the market that has been building. So watch carefully there. Now notice we're also going to be pushing into this resistance area and that zone up here, right into that 50-day moving average and that accumulated moving average resistance that's coming into play right in that area. Let's take a look at our, and if the bears were to find inspiration here today, then pushing down below that area, we might actually fill this gap here in the chart. First, if we were to slip and fall, and then we're probably coming down to the lower side of this little consolidation zone in the SPY. If we look at our QQQ, our QQQ is obviously holding on to this price support 2 days in a row. We held it in there yesterday. We did make a new low, as you can see, and trying to push back up. If the bulls can continue to find inspiration today, you can see the resistance area right there in the chart, and then breaking through that level, we'd be right back up here in this really strong congestion zone of the chart where we chopped a lot of price action in here. So we'll want to watch that carefully if we stretch back up in here. Now, our downtrend here in the QQQ is relatively flat, but as we start pushing up into this zone, we'll want to be watching again for that possibility of failure. That's a big recovery here in the market, and that place where we could look for that failure. So at the moment, we're looking at a relief rally, not much more. And if we take a look, we're going to also be running into that 50-day moving average. And notice we're getting that accumulated resistance here in those moving averages right in that zone. So we'll want to be watching that pretty closely. Now, if the bears were to find inspiration here on the day, well, once again, I'm going to look at that gap right there as a possible pullback. We could fill that gap pretty easily with some bearish data, and then beyond that, we're probably moving just slightly lower right down in here, and then boy, it gets really ugly. We really could do some dropping if the bears were to start taking out those levels in the chart. If we take a look at our IWM, well, pretty rough. We did make a new low yesterday. We did push up, and we're testing the bottom side of that trend line that I showed you in the chart. But we're trying to follow through here this morning and push back up. So where's our resistance in the chart? Well, first off, I'm going to look probably right across through here in that chart. We've got a congestion area, a little bit of resistance in that area. Can we push up into there and break through? And what we're really going to be looking for is to see if we can push this up enough that we can kind of breach the center part of that candle and maybe start pushing up into this area of the chart and the top side of that candle. Pushing on beyond that, well, then we're up here testing this resistance area in the chart and possibly that downtrend, and that would be the place where we would be watching for that potential failure to occur on this relief rally. So watch that carefully. You'll also want to keep in mind on our moving averages as we push up into that area, we're going to be running into that moving average resistance as well. And then if we find some bearish inspiration and we start dropping on through here, well, there are some levels in here. It's kind of a mixed a grouping of data in here, but we could push on down like we held it yesterday, and then pushing on down below that, probably down into this area of the chart on the Russell. Let's look at our VIX. The good news is our VIX relaxed just a little bit yesterday, but clearly it really didn't change all of that much. We continue to see this upside trend here in the chart, holding that up. Our trend right in here is holding higher. And if we were to pull back, we could find some price support still in that chart along this area here. Right through that area, we could find price support if we were to pull back. So if the bulls find inspiration today and can push up, we need to see this relaxing and relieving some of that pressure here in the market. So watch that closely. If we were to catch some of these price support levels and then bounce, well, get ready. The selling could really intensify if that were the case. And I would expect those CTAs to really start selling off hard if we were to break these current price levels in the indexes on another sell wave, and look for that. And that would really add tremendous pressure to the market. Now, if the bulls or bears find inspiration here today, then we're going to be looking for those breaks higher here where we could start pushing through that downtrend and holding up above these 18, 19 handles in the chart, holding up here, and that could set up that pretty ugly move if we hold up in this range on a bearish move and start moving up toward these next areas of resistance in the VIX. let's take a look at our T20s. Our T21-22 is our best hope, really, of a relief rally to the upside. Notice yesterday we didn't get much progress done. We were looking pretty ugly here overall. And our T21-22 is just buried down here at the bottom. We are very, very oversold in the short term on our indexes. So we have a big upside opportunity that could play out if we can get a little bit of energy and if those bonds can relieve some of that pressure that we see here in the market. Now, noticing if the bears were to find inspiration, there probably isn't much more downside, maybe more crawling along the bottom kind of thing. And I would also say we run that risk that we could pop up here a little bit like we did the other day and then still not see that momentum to the upside if we don't get any relief in those bond rates. So watch that closely. Pretty common though, if we do start a relief rally, we could push up here, test like a resistance area in here, or maybe push up midway in the chart on that relief. Let's take a look at that was a 2-day, but the very similar thing showing up here in the chart. If we take a look at our T21-08, percentage of stocks above the 40-day moving average, as you can see, a little bit of a hockey stick on the ice here. That hockey stick on the ice means that we have an opportunity to score. And as we push back up, we'll be looking for some resistance areas here in the chart if we can push back up. And so if those bulls find inspiration, look for that pushback into this area where we'll find these resistance areas, keeping in mind the number of stocks above the 40-day moving average is now at 25%. Not a good situation. We need to see quite a relief rally to get us back up above 50% in chart. So look for some struggle here as we rally back up, and watch these resistance areas as a place in that relief rally that we could find resistance and start pulling back again. And then our T21-07 gives us some pretty good signs here. This is a percentage of stock above the 200-day moving average, and you can see we're still holding relatively well. A little hockey stick here on that as well. We did slip below that 50% area here in the chart by the close yesterday, so a little bit of concern as we slip back down here, but I think there's a relatively good chance at this point we'll catch a relief rally in here and we'll push back up, but then we'll want to note that we're creating some of these resistance levels here in the chart that could prevent us in that relief rally of just zooming right back to the top. And then if we take a look at our T21-01, well, T21-01 continued to expand yesterday, mostly on the selling. So we have really spiked this up. The bears have woken up, and they're probably not going to go back to sleep for just a little bit. So watch that carefully. We're going to need quite a bullish move and some things to really start to change to put those bears back to sleep. So you can see spiking up here into that resistance area of the chart. What I'm afraid we're likely going to see is on this relief rally, I'm going to guess, and that's all it is right now is a guess, I'm not predicting this, guys, is we could see breadth pull back on the relief rally, and that's not going to be a good sign for us. We need to see that breadth continue to expand on the buy wave. I'm afraid that's not going to be the case, but we'll wait and see how that performs. Let's take a look at our economic calendar here for today. And our economic calendar, well, we've got a little bit to worry about here this morning, but not near what we have lately on the calendar. We've got mortgage applications coming in this morning. You could probably expect they're not going to be as great as we would hope them to be as our rates continue to go up. We saw our housing prices yesterday falling substantially yesterday. So that's one of those signs that our economy could be weakening. Housing market is critical here for our economy to show that confidence and really kind of critical in keeping us out of that recession area of the market. So we'll have to keep an eye on that as we progress forward. But mortgage applications could come in weak here today just as a result of these higher rates. We've got Atlanta Fed business inflation expectation. We'll want to be keeping an eye on that. There is that chance that that could move up a little bit, and businesses are looking at some problems here, obviously, with our rate of inflation. So watch that this morning. And then we've got our petroleum status. And I think this will be really critical for today as we watch those oil numbers, trying to decide what's going to happen between demand, economy weakening, and the geopolitical situation out there in the world. We've got a 4-month bill auction and a 20-year bond auction. This one will be interesting to watch here today, just simply because we've been seeing those bonds move up and those longer terms have been moving up. So watch that one carefully today. Beige book, Treasury statement, and then we've got a couple Fed speakers well after the bell. As we move into Thursday, kind of keep in mind we've got jobless claims, Philly Fed, more Fed speak, existing home sales, leading indicators, natural gas, and then later on the end of the day down here after some bond auctions, we're going to have Fed balance sheet, and Bostic will be speaking. So yeah, we still got a lot to do here to get through the week. Then let's take a look at our earnings calendar today. In our earnings calendar, we have more notables here for today. That could be both helpful or be hurtful. If we watched yesterday, UAL had a good report and surged up. And I think this quarter, we're going to see a lot of this where if we get a good report, we're really going to celebrate on that stock because the emotion right now of the market. And if we have a bad report, we're going to punish stocks in a big way. So as we look at these reports for today, we'll want to be paying attention to that and realize that it could be big moves to the upside on a good report, big moves and a lot of punishment on something that misses. So be prepared for some big price moves as this emotion continues to be very highly charged in our market. First off, we've got Abbott Labs that will be reporting today. Looks like it's trying to go just a little higher this morning. We got ASML that will be reporting. That's a little bit lower here this morning. We've got CFG reporting today. We're going to have, and by the way, we've got a theme for the rest of the week. We're going to be getting lots of regional banks. So keep an eye on these regional banks. We had one of the former FDIC members come out with a news report, Stella Blair, saying that regional banks could expose critical weakness here in our banking system. So we'll want to be watching some of these regional banks. Those could be one of those telltale signs that there's trouble on the horizon. We're also going to hear from PLD this morning. We've got Travelers. Insurance, this has been extremely strong. Keep an eye on that. And U.S. Bancorp that we'll want to be watching. And that one's already showing pretty ugly sell-off here this morning. This afternoon, we've got quite a list. I'm going to run through these really quickly. We've got Alcoa, OZK. We've got, OZK, BDN, CCI, CSX, DFS, EFX, FNB, FR, KMI, LVS, REXR, SLG, and SNV, and then WTFC. So we've got quite a list and a lot of regional banks here over the next several days that we'll want to be watching pretty closely. Let's take a look at some stocks that could be setting up for today. But before we do that, everyone, if you could do me that quick favor, If this is the first time you've seen these videos, please click that subscribe button on YouTube. Also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful or helpful, if you could do me that favor, and that would be click that thumbs up button, leave a brief comment. That helps the channel to continue to grow. Thank you so much to everyone who does take the time to do that. I really appreciate it. And all the kind comments. Thank you so much. Very humbling, and I truly appreciate it. Let's take a look at some of these stocks setting up. Remember, guys, these are not recommendations to buy or sell any security. You're going to have to do your own due diligence. And remember, all 4 indexes are in a downtrend. Although QQQ and SPY were their modest downtrends, we are still in a downtrend. So one of the things you want to be careful in doing is only looking at long stock trades and just chasing into long stock trades, because remember, as we rally back, what we may want to be looking at is short setups in the market. So as I look at these, just be really, really careful. One of the things we're going to have to be paying attention to is the strength of the dollar here. We continue to see, there's another bad tick. They resolved that really quickly yesterday in here, but we got a bad tick in T2122 on UUP. But you can see our US dollar is trying to get a little bit of a weakening candle going in here today. That could help provide us a little bit of relief. But as we continue to hear, European markets are getting set to lower rates. But here in the US, we are not. That could continue to strengthen the dollar. So watch that carefully here. And of course, as bond yields, if they don't start easing up on these yields, we're going to see that dollar continue to strengthen, and that's going to be a problem for us here in the market. Now, if we take a look at our financials, this is something we're going to really have to be paying attention to in these financials. We have really, even though a lot of these big banks reported good or better than expected earnings, we're continuing to weaken as we see these bond yields going up, putting pressure on these markets. So as we relieve this back to the upside, as we relieve some of this downside pressure from this oversold condition, be watching some of these resistance areas and places in the chart where we could easily find that downtrend and resume a downtrend here in the chart, and potential short places to be played here on some of those financials. And if we look in individually on some of those stocks like WFC, just holding in there on a consolidation. So this could still have that potential. If we could find that bullish move and we're coming out to trend, that we can push on higher. But if we start looking at other places in the market, that bounce back rally here in Morgan Stanley is really setting us up for that possibility that we could see failure at that resistance and start pushing back down. So there's a mix of things going on here in those financials that we'll want to be paying attention to. We'll also want to be keeping an eye on the regional banks here. Regional banks, whoops, KRE, we broke support in here on those regionals, and if we continue to see some downside pressure, we would look for support areas here in the chart. I wouldn't want to short this right here, but any rally back, I would be watching for that opportunity for that potential short in the regional banks. And I think we've got some problems potentially coming here on those regionals. So watch those carefully. Let's take a look at our energy sector. Energy has been very, very strong, but the last few days we've been relaxing and pulling back. That is a good sign for the market. But remember, as we come into these trends in the chart and we come into support levels, watch for that opportunity that we could hold. And remember, we're going to get a petroleum number today. And if we continue to see those petroleum stockpiles weakening that we've seen lately, then watch for that reignition here in some of those oil sector stocks. That possibility we could push back up in those areas. So watch some of those carefully. It's certainly possible. And of course, if Israel retaliates, depending on how big that retaliation may be to Iran, we could see those tensions continue to build over there, and we could find some some worrisome pressure here in those energy stocks. So watch that carefully. Then if we take a look at other places in the market, well, I've been seeing some really interesting strengthening in some of the old boring companies like Camel Soup rallying up yesterday. It didn't make it through that resistance in the chart, but seeing a little bit of strengthening coming into some of those defensive sector stocks in some of those. If we look at like KHC rallying back up, trying to reclaim a support level in that chart, but still in that potential that we could find that resistance and resume that downtrend. If we've got enough worry in the market, then we'll see that rotation into old comfortable dividend paying stocks, and that possibility, if we were to hold up here and reignite to the upside, watch for those old boring companies to come up. When the market gets spooked, we start pulling into those areas, those necessary items that we're still going to need, even if we slip or if we go into recession. So watch some of those. We could get a reignition into some of these in the market if that fear continues to come up. Take a look at stocks like AMD trying to bounce back up here and hold underneath this resistance in the chart. These are the kind of stocks I'd be watching carefully. If we can't break that downtrend or break that resistance, we start looking for those sellers to come in and push things on down here in AMD. If we take a look at Apple had that big surge the other day, tried to follow through, but then we hear that China sales are declining and we're pushing back down. It's going to be really critical here if Apple can hold onto this downtrend break. If we can't hold that area here and start moving back up, well, we run that risk that we could slip on lower and maybe come right on down and test this major area of price support in the chart. So be kind of careful. There's that chance that we could go both ways here in the market very, very easily. And our techs are starting to show some of that stress here overall. Now, there are those like MU holding up here like nothing's happened over the last week, and MU has been very strong consolidating this move out to trend. There still is that possibility we can complete that consolidation and then get that resumption to the upside here in Micron. But at the same time, we have those stocks showing us quite a bit of, well, downside potential. Intel continuing to fall pretty hard here. Any rally back would set up a short, in my opinion. Any rally back up would set up that position. If we take a look at some of our retail here in the market, Nike showing us a rally back right now into price resistance levels of the chart and downtrend. If we can push through there, fine, but I would be watching for those potential failures here. If our economy is weakening, retailers tend to struggle in the market, so watch carefully for that. On the other hand, we have Walmart holding up relatively well in this wedging pattern here in the chart, but also in that very vulnerable position. Symmetrical triangles have about a 50% chance that will pop out to the upside and a 50% chance will break down to the downside. So we're kind of stuck in this really weird place here on Walmart. It could go this way or it could easily go this way, so be prepared for that. We see Target showing us weakness already. We rallied back to this resistance area of the chart, found those sellers, so I think any rally back in here sets us up short. And Costco might be on the verge of making a decision here whether or not we're going to hold this downtrend break and price support and move on higher. We did fail this resistance, so any further failure in here would raise some questions, but if it can hold in this area, then maybe we can start pushing to the upside. I would be keeping a close eye on things like TLT. TLT is the 20-year Treasury bond. Remember, we got 20-year bond auctions today. Obviously, this has been weakening dramatically as we continue to see those bond yields moving higher. Keep an eye on that. The inverse of that would be TBT, showing a lot of strength. This is the ultra short on treasuries, and you can see that strength. So any rest or pullback in here would set up opportunities to the upside. And we're going to have to continue. There's something going on here in the gold market that is really, really interesting. Usually when the dollar goes up, gold stops going up. It goes down. That has not been the case. There is a fear move happening here in gold. We're going to have to continue to watch this. I am looking for this to pull back a little bit or continue to rest into this trend, but we'll have to keep an eye on some of those precious metals. Silver continuing to hang in here against this resistance, trying to break through this major resistance in the chart. Once again, I think this needs a rest or consolidation, but my goodness, we're still showing an awful lot of strength in these and a tenacity of that fear raising, making people want to continue to buy these even though they're quite elevated. So with that, everyone, I want to wish you all a fantastic day. Thanks so much for listening and being here. Sorry this video got a little long. I wish you all the best, and I will see you right back here bright and early Thursday morning. Have a great day.